All right, good morning. Welcome everybody. Thanks for tuning in. Let's just get sorted out here and make sure everything's working properly. Hopefully you can hear me. That's the main thing with this new setup. Still getting used to it. Stressful coming on first thing in the morning with this new system. Let me tell you, but looks like people are finding us, so that's good. That's good. Thanks for tuning in the morning. Absolutely. And we'll see who's here in a little minute. But before we do, if you're watching this on the replay, we go live Monday to Friday, 8 o'clock to about 8:45. It'd be good to have you join on live if you're able to. If not, the replay is always on the channel, so you can always catch replay. There's usually some good little nuggets in there from a lot of the people that are participating, which I really enjoy. Learn a lot on these live streams, definitely. So it'd be great to have, well, more the merrier. But let's see who's here this time, and hopefully my chat's working as well. So we've got, it's working. There we go. It is working. We think we're on the ball here today. Candace, always good to have you here. Good morning. Hopefully your day started off okay out in the market. I took a little quick look today, and we will get into that because it was a big dividend day today. So that was nice to wake up to. So that's always good. Hopefully your day is good as well. And Stan, good morning. Welcome. Always good to have you, Stan. Hopefully you're as well. Good morning, and hopefully your day is started off okay. Hopefully everybody's got a coffee, the coffee crew as well. MC, you made it first thing. Excellent. Didn't roll in at the end of this time, so it's good to have you here. And Abigail Bailey, welcome. Hello, and good morning. Hopefully everybody's coffee is hot today. So a couple things to talk about today. Obviously, market doing what it's doing, but the good news is nice to wake up to dividends. So it was actually a really good dividend day today. I was actually surprised when I checked my email this morning and had a bunch of them come in. So I think this month's probably going to be like probably one of my top months, I think. Who did? Yeah, let us know what ones you received, Candace, and I'll get into mine. Candace has BTC.Y, HUTL, VEQT dividends in the email this morning. That's awesome. So that's good. Yeah, I had, Candace and everybody that's watching, I had BTC.Y, VDY, VFV, and what was the last one? Our RioCan, REI. So I had about, it was about $30 actually that came through, which was it was a small one, but it was the first one from PSA, from that Purpose High Interest Savings ETF. I think it was 20 cents, something like that. So not a huge one, but I've just started adding to that. So that was good. Yeah, there was, let me just quickly log in. I think it was around 30 bucks, which is good. I'll post it over on I haven't had a chance yet this morning to post it on my community tab. Let's just go through here, filter these out. VFV, 12, 20. Yeah, close to 10, 20, 26 bucks, 27 bucks. So pretty good. So let us know in the comments if you got anything else in today. It was nice roll in to start off the new, to start off January. It's always nice. So I basically, what I did with mine, Candace, I'm not sure what you do with your dividends, but BTC.Y, I basically put that back into BTC.Y, absolutely, and VD, basically everything just kind of rolled back into what they came out of, So bought BTC.Y, did fractional purchase of REI, RioCan, did a fractional purchase of VDY, did a fractional purchase of VFE. So everything's already been used. I didn't do, from that 20 cents, I didn't put it into PSA, but I just added the rest of it into all of it. Kind of the leftovers went into VFE. Yeah, so that was good. It was a good morning. It's nice to wake up. It's nice to wake up to those, especially when they're growing. That's the one thing I've really noticed after it's been really noticed it this year and towards the end of last year. Now that the portfolio is like starting to really kind of snowball, the dividends are really starting to. I mean, when you first start out, it doesn't seem like a lot, but you stick to it, and each month, you just see it grow and grow and grow and grow, So that was always kind of nice. QQCC, Candace, I'll have to look that one up, what that is. I'm going to add that to let's add that to QQ, to our coffee crew. I'm not sure, why is that not showing up? QQCC. QQC, not only one C. That's why it's not showing up. QQC. NASDAQ, Canadian hedged. There we go. What one do you buy there, Candace? The what NASDAQ is it the just QQCC? I'm just looking here. Is that the Canadian one? Canadian hedged? There's a few of them. I'll have to figure that out. Have to figure that one out. MC yearly dividends. Yeah, those are always nice, right? VEQT. So you're going to join the XEQT crowd. That's okay. That's a popular one. Zach will be happy to hear that if he's watching. That you add into XEQT. That's not bad. Okay. I've looked at that. I've looked at XEQT as well, but haven't obviously bought any. Everybody knows what I have in mind. Maybe one day I'll join that. Maybe next year or something like that as the challenge. If as I continue, I can't. There's only so much money that you can obviously can't invest everything, and I can only put it in so many places for the year. So you don't want to overstretch and be strapped because I put everything in an investment that I might need. So kind of keeping where I'm at for this year. Carry on with my kind of plan for this year. That's my goal. But excellent, nice to get the yearly. It's nice when the yearly ones come in. The end of the year ones sometimes can be some big ones. I noticed that in my more in my RSP and in my lira that I have that's kind of sitting there. It's always the kind of, when I get those last end of year ones are always nice, and the quarterly ones that come through there as well. But yeah, because I can't add anything into that lira, it just kind of, it's always nice to get a nice dividend, and the end of the year is always a nice little bump up, even though the market's down. So that's always good. Let's see here. I only had really one news article to share today. It seems like I don't want to say it's slow in the news, but nothing really jumped out at me today, really. So if anybody has anything that they want to bring up, as always, right? The comments are always open and appreciated. So feel free to jump in if you've got anything you're looking at or that kind of thing. Absolutely. So let's pull up the screen share here, and we will pull up my article. There we go. Coinbase. This is one jumped at me because I invest in crypto. I don't use Coinbase. I think more Americans would use Coinbase, but they're laying off 20% of their workforce. This is the one thing about Coinbase is it really kind of almost follows crypto, like Bitcoin in a big way, but they're laying off another 950 employers, so reducing their workforce by 20%. So it'll be interesting to see what happens. There's been obviously people know, this channel's not a big crypto channel, but everybody kind of knows there's been a lot happening with crypto, FTX, lots of insolvencies, and lots of not good things happening in the crypto space. So it'll be interesting how this happens kind of long term. I did notice that though is Coinbase, I think the stock actually, if we look, it probably went up today because they're laying off a lot of people. So up 4.5%, which is, I guess, good if you bought some Coinbase, because it was down substantially and it's still down. I think it's down like 85. It's really following almost Bitcoin. It's down 86% from their value last year. So not necessarily great news on the crypto front, but I think we'll get out of it. I'm still, like we talked about with my investments in my TFSA, BTC.Y, I still invest in that. So I see some long-term appreciation in that space, but we have to get through this ugly part and get through to the next. I think, the next. I don't know what will bring the next Bitcoin bull run out. Crypto run will probably be some kind of regulation that's been waiting for a long time. That's probably what's going to be. I know Candace, we were talking about this on your live stream on Sunday, but that's probably the case, especially in the States. But yeah, we'll just have to see what happens. I don't have like a huge chunk of my portfolio in there, but some. Anyways, MC.V. Okay. Set and forget. Yeah, that's the big thing. XEQT. Yeah. So a little bit too much Canadian exposure in there. Okay, I haven't really looked at the full underlying holdings of it that closely, MC. Partly because I don't invest in it, but I know there's a few people that do, so it would be worthwhile looking. But from what I've been kind of looking at MC is 2023 might be a decent year for Canadian equities. I'm not sure how much energy is in there, but that's what I've kind of gathered from a little bit what I've read is it's kind of predicting that the Canadian market will do quite well in 2023, but we'll have to see. So it might be okay to be a bit overexposed with Canada for a short period of time, but again, it's hard to know. I don't know the full exposure on that. I'm going to guess have more, obviously, like a lot of the S&P Canadian market is a lot of energy and financials, right? So probably heavy on that, but you might do okay in 2023. Yeah, I'm kind of bumping up my Canadian exposure with doing VFV in 2023. So who knows who's right or who's wrong? It's always hard to know. Anything could kind of happen. But it is definitely a set and forget a product, which I don't think you can go wrong, necessarily. It's just trying to pick the one that would do better than the others. It's hard to know. Paul, good morning. Always good to have you. Thanks for tuning in. We were just talking, Paul, I don't know when you came on, we're just talking about, dividends that come in, what people are doing with their, what people kind of do with their dividends once they arrive. And some people take them and put them into different investments, not just roll them into the individual, stock that they got or the ETF that they purchased to go through. But everybody's different. Everybody is different. It's so that's the kind of fun thing to learn is everybody has their own, does their research, has their own opinions, has their own predictions, a lot of things, of what's going on. So all good about that. Yeah. Okay, so we're talking about XEQT, right? There's about 25 to 30% Canadian exposure in EQT. Okay, but Canada makes up only 3% of the global GDP. Yeah. So if you're looking for allocation based on, now some of these got cut off on the comments. I will finish reading it. So the last sentence is so if you're looking for allocation based on data-based allocations, VT is much better. So it does have quite a bit of Canadian exposure. Yeah. For that. Yeah, it's hard to know. This year is going to be it's hard to know what, like, all signs are pointing to, it's like we're expecting a recession, but it's almost like, are we in it now? Are we halfway through? It's really weird. We just haven't had, like, recession typically, it's not normal. We're not in a normal recession, right? Right now anyways. Jobs are still plentiful. So it's like, what the heck is happening? We're kind of waiting for this, and the market is still waiting for what's going to happen. I'm not sure. I think one thing for guarantee is we're going to have rate increases come January. Bank of Canada, the Fed was actually speaking today. Not anything. Powell was speaking today I think it was in Switzerland. I could be wrong here. Switzerland, I believe it was. Sweden. But really didn't get into anything about their policy, other policy, outlook in his speech. So I have to read into that, but I think the market's definitely predicting rates increasing, and then, but the whole question is when is it going to hit the top? I think we're pretty close to it in Canada. It might be a little bit different in the States, but it's hard to know. Hard to know. Brian, better late than never. It's okay. You can tune in whenever you want. We're here. We're always here, 8 o'clock. So you can tune in when you want. Nothing wrong. We won't penalize you for being late. Hopefully you got your coffee and you can join us for a little bit. It's always good. Oh, Paul, buying HDIF. Okay, there we go. Is that one of the ones we have added on the? I'm gonna add that to our list. Harvest Diversified Monthly Income Fund. Paul. I've got a basically got a watch list for our group here that we're just kind of watch on Google Finance. I can pull it up here, and what we're doing is just kind of following some of the ETFs, some of the shares that I've just started this list, so it's obviously not exhaustive by any means. But as things kind of come in the comments, I'm just kind of keep some eye on some of them, and it's kind of fun to watch. Gives me something to kind of look into and research as well. So I have those kind of started. We can kind of see how people, how some of the ones are doing over the long term. We can kind of jump in because there seems to be a lot of overlap with what people invest in. So. Good call on that one, MC. Now again, yeah, it all fits in there. So Canada will outperform the first half. I think that's kind of what I was meant. Kind of was where I was kind of going at. S&P, in my guess, will outperform the back half with higher rates. More value-based index perform better. Yeah, I think you're right on there. Because it's going to take. Yeah, we're on the same. We're kind of on the same page with that. Although I'm not going to stop. I'm focusing on. For the year, I'm really focusing on VDY, Canadian dividends, that ETF, but still putting into the S&P as well. So we'll see. I think we'll roll up. And this is on the rates, so pivots until late 20. Yeah, rate. So Canada's coming up in end of this month, right? I always forget the day. 25th, I think it is. 23rd or 25th. Anyways, end of the month. We're guaranteed 25 basis points, right? United States is coming up February. Is it February 3rd? I think it is the beginning of February. So it's interesting to see what will happen. Rates will go up, obviously. I think that's kind of a given. And a pivot. So MC let us know, everybody else, kind of in the comments, when you think we're gonna hit the top or pivot. I think you're pretty close, MC, with what I was talking with a coworker yesterday kind of about this. We always talk about the market on our morning phone call as well, where we see rates are going, everything else. I could see them. We were talking more about Bank of Canada. We were talking about rates up again. We think January will probably be the top. That's just kind of an inkling, but again, it's going to depend on jobs and everything else. So we're going to get a slowdown. We're not going to get the big 1% increases or the 75 basis point increases we saw. It's going to be 25 probably. Signs are pointing to 25 in this month, and then I think they're going to try and pause. But again, like you said, I think the pause is going to be try and hold them as long as possible. And I think we're in for higher rates for the foreseeable future. I don't see them. I really don't see the only way a pivot would come would be a deep recession. But I'm not convinced. I'm not convinced we're going. In Canada could be. It's hard, really hard. I'm not super convinced, and it could be completely wrong, MC. I'm not convinced there's going to be a really deep recession. I think it's going to kind of be soft landing is not the right word, but I don't think it's going to be huge. Yeah, and it's because again, there's jobs, right? It's coming down to jobs. We're seeing layoffs in tech mostly, right? So far, and that's the thing. Like, I mean, we had the job report last week, right? Last week it was 104,000 jobs or something like that, as opposed to the estimate 5,000. I mean, that's just way off. So we'll have to see. But again, no pivot for a while. I think they want to keep. We were talking about yesterday about mortgage rates, and we're going to see we're going to see 4s and 5s in front of mortgage rates for interest rates. I think for the foreseeable future. And yeah, we're on the same page. But if it does, yeah, it would be a pivot. I think once they pause, that will be a good sign as well. It's almost like the pause will be the pivot, kind of. Yeah, it's hard to know. It's just such a weird. It's a weird. I mean, they haven't called the recession, right? But it's a weird recession. It's the most kind of like everybody knows it's coming. Everybody is talking about it. Everybody is talking about rates. But again, we have record employment, right? So things aren't necessarily making all the full sense. But it'll still be an interesting year. It'll be an interesting year. I think rates are really just starting to have the impact on people too. It's such a lagging, obviously mortgage rates have gone up, right? In any kind of lending rate, but a lot of people aren't necessarily impacted by them yet. It can sometimes take, a year before you're impacted on a mortgage payment. If you have a mortgage because Canadians a lot of times go fixed rates. A lot of people did do variable rates over the last couple of years because they were so cheap. So they're feeling the pain, right? But anybody that bought a home 4 years ago, coming up for renewal though, is going to start to feel a bit of a pinch too, because they used to have their rate used to be in the 2s or 3s, depending. Now it's going to be 4 or 5. So every little bit kind of hurts, right? So it just takes time for it to come through the market. But we'll see. It'll still be. It's just gonna be an interesting year, that's for sure. For me, I'm just sticking with my plan and not trying to be smart. Just kind of rolling with it. So, yeah, you're definitely feeling an impact if you have taken variable rate, for sure. Yeah, you can't. Your payments. Anybody MC with a variable rate mortgage is feeling, or any kind of variable debt, even a line of credit, or even if it's an unsecured, like regular line of credit that you might have a student line of credit or something like that. With even payments go up, right? Or the minimum payments go up. If you have a home, I think the real people that are getting pinched would be the ones that have, again, if you're investing in a like a rental property, and you're using a line of credit on your home for the down payment. People didn't think of it as leverage, as an investment, and you're leveraging your investment. And now, as we're seeing, you can get caught if rates go up, and it can be quite painful, because your payment will go up, and your rents aren't rents are more expensive, but if you have a tenant in there, it's good you have a tenant, but your mortgage payments are going up higher than what you're able to charge with rent, to cover that cost increase. So I know there's probably lots of landlords that are, because so many people bought properties thinking more about appreciate. The Canadian market real estate was kind of bonkers it's been bonkers for a long time, and it's kind of adjusting now, for sure. It's people realizing now that you can't necessarily depend on increases of value to get you through. So cash is king. Yeah, you do. You still lose on inflation, but most other asset classes. That's exactly it. Everybody. I think if we look at the numbers, right, everything in 2022 was basically wiped. Like, you're flat. If depending when you invested, it's kind of like wiped out I would say the COVID gains, but that run up in 2021, everything's basically wiped out. But this can happen, and nothing wrong with cash, especially now. I think you're getting into this. So even though GICs get a bad rap sometimes, 2022 has showed its outperformance. Yeah, GICs. I mean, I think a lot of people are taking advantage of GICs right now, right? There's been a few people MC on the channel that have commented that they bought GICs because if you can guarantee, I mean, obviously inflation is whatever it is, 7, 6, whatever it is right now. That's what they say it is. It's more. And if you can, I mean, we haven't been getting rates on GICs or high interest savings cash accounts for 20 years or something like that. Like it's the highest. I remember reading something about when the TFSA started, the rates are higher than when they first started. So we're getting good rates for people for GICs. So there's nothing wrong with them, right? So there's nothing wrong with putting something in and getting a guaranteed, as we're seeing in the market, right? The S&P was down 20% last year, 19 point something percent. I mean, I can talk about my portfolio. Everybody's seen it. If you're down 17%, there's nothing wrong sometimes that's what people see that. I don't necessarily think the long term as much, but the worst thing you could probably do is sell something that's down that you think, like if your S&P is down a little bit, to put it into a GIC. But if you do have cash, there's nothing wrong with it to hold it to see. That's kind of what I'm doing a little bit too, is putting a little bit into the purpose high interest ETF, which I'll build up buy it once a week just to kind of build up a bit of cash buffer in my TFSA. It's more so as a kind of emergency fund, right? So that I might, I don't want to have to jump into my TFSA necessarily, but if I have to, I just want to kind of bump up, because the rate, if you're getting PSA is paying 4.59% right now. If I can get that just by holding a bit of extra cash in the TFSA, even if I have to dip into it for some reason in 5 or 6 months or whatever because of some kind of emergency, it's better than just sitting in a regular account. So, there you go. So about 20, yeah, 20% GICs. So GIC outperformed by probably 22.5 on average over the year. Yeah, that's the thing. GICs have done. That's why people are jumping into them. But last year was we talked about it. We talked about it a bit last year. I'll pull up your other comment first, but cash buffer I'm putting towards the GIC, not much, maybe 20K or something like that, or I'll go with a 10K into 1 year and 10K into 2 year. Yeah, the reason, that's a good way to do it. I guess, we've cautioned before, is it depends on, you got to make sure that it's not something that you possibly might, this, right? But if people are watching that don't, you want to make sure that if you have everybody should have a bit of an emergency fund, right? Don't put all of your cash into it. This is basic stuff, but don't put all of your cash into investments, number one. But if you're putting your cash into something, put it into something safe, like a GIC, but be prepared. The thing with the GIC is make sure that's something you can access. If it's your emergency fund, make sure it's something you can access without taking too much of a hit, or something that you can actually access, because there's certain rules and stuff with GICs that you might not be cashable, etc., or maybe cashable, but you wouldn't get your interest. So sometimes it's better just to have it in a regular savings account, or check out some of the high interest savings account. There's pros and cons to everything, right? You lock your money into a GIC, you'll get typically a bit better rate of return, but you lose that little bit of flexibility, right? In terms of that, obviously, depending how long you lock it in. If you need to access it, you might be penalized. It's kind of similar with the PSA. Like, you wouldn't necessarily want all of your emergency fund into something like an ETF like PSA. The returns are decent, 4.59% right now, but there's also, if it's for your full emergency, you don't want to. It's almost like you got to be careful, because it's also you can only trade it during, if it's an emergency fund, be careful, because if you can't access, sometimes when you have an emergency, you need the money, like yesterday kind of thing. So if it's for some reason you have, your car breaks down, and so it's a weekend and you need to get new tire or whatever, and you have no access to these funds because it's closed. B, maybe the market's closed. So you need to wait to the next day to cash it in, and then it takes some time. For example, if you have it in Wealthsimple, usually the withdrawals are fairly quick, but there's always that delay of being able to get it out to your account. But once you sell, it usually takes a couple days to settle, right? So be careful with that. This, I guess the one thing is what you're putting your full-time, kind of emergency funds. Okay, yeah, that makes sense. So you believe in, yeah, I mean, everybody, obviously, I mean, I when I say emergency fund, I almost kind of treat it like it's like my savings account, that with stuff sitting there. So I kind of let it hit a certain part, and then once I know has a balance, the certain balance that I want it to be, MC, is I'll kind of take some out and put it in other things. That's kind of how I do that. And then there's still, yeah, exactly. It's nice to have access to some kind of line of credit, whether it's a line of credit on your house, sure, to give you some access just in case, right? Or even an unsecured line of credit. If you're not using it, you might as well. If you have it and you're not using it, it doesn't cost you anything, right? I've got one at my bank as well, a line of credit. And it's funny, I haven't used it in so long. Last year I hadn't used it for a full year, and they closed it. And I was like, so I was doing my online banking, and they're like, oh, well, you haven't used it in a year, so we turn it dormant. So I had to transfer. I had to take $1 out of it and put it back to get it active again. It's kind of funny, but so it's good. Yeah, definitely have some liquidity there. Yeah, that does make perfect sense, MC. If that, yeah, because if you can put it to better use somewhere, right? Or have it that you obviously that's when we think good idea with access to like a line of credit. That is a good planning, because that way your money can be putting somewhere and working for you, right? Instead of just kind of sitting there in an account. But I don't know. Just be careful. I mean, obviously, I think you're a pretty savvy investor, but everybody has their own levels, right? That is a very good point. Hopefully all this comment came through. It did come out. FYI, for if you want credit or loan, yes, make sure you open it before you retire. Very good point. Trying to get credit or loan without any kind of employment is next to impossible. It might cost you more money on interest rates. So something to be aware of. And if you're not, this is the thing too. Like, don't. This is what a lot of people do, is if you have a house or something, is get a line. People will get a line of credit, right, MC, or have access to a line of credit on them instead of a mortgage. Once their mortgage is, well, it would be nice to have a mortgage that's paid off, that's for sure. But if you're retiring and going into a home, even if you're paying, like I know lots of retirees will downsize and then buy a new home and pay cash for it and have no mortgage. But it's always maybe a good idea to look at some things before that happens, before you retire, to possibly get any kind of credit, for sure. It does make things easier. There's still programs out there though for retirees, MC, that can access lines of credit. Depending, they obviously don't. They're kind of just different products that can still access. I know Manulife has a good product for retirees with a line of credit type of thing. But it's definitely easier. I guess even not talking about retiring, MC, and everybody watching, it's easier to ask for credit when you don't need it. That's I think an FYI for people. If you don't need it, it's easier usually. It's kind of not a bad idea to apply. I have some saving account at Tangerine, and it popped up one time that they were offering. They always send these you get these little bonus offers, right? And they started a thing where they sent up a bonus offer. It's like, apply now for a line of credit. You get approved for whatever. And because I have my MasterCard at I have my MasterCard at Tangerine as well. So I got this thing. So I applied. So I have a little, it's not huge, but I mean, I'm not using it, but it's there. And that's the kind of thing. It's nice just in case, right? So for example, talking about emergencies is, for some reason, if I have an emergency and I have to put some extra on my credit card for some reason, and it's I don't necessarily maybe have enough extra funds available to pay the whole thing off, so I don't pay the interest. I can pay it off with my line of credit, and my line of credit is way less interest than my MasterCard. So there's some kind of ways to work it out to take some advantage of some approach. And that's exactly it. Yeah, Candace, it's good so utilization. And Candace, I think you did a good video on credit. Through work, I see credit stuff all the time. But yeah, you don't want to be maxed out on anything. You definitely want to keep it ideally as low as possible. Sometimes situations cause you to have to increase your the balances on your cards or lines of credit, which it's unfortunate, but sometimes it just happens. The worse than having your credit at the limit. The worst thing that you can do is have it over limit. Try and avoid that at all costs. That will really, really hammer your credit quite quickly. Yeah. So if you can move stuff around to different things, sometimes is a benefit. People sometimes get you got to be careful too with cards. Like you might be, if you have a card that's close to the limit or not, almost, sometimes what happens is you get an annual fee comes in and you don't realize it, and it brings you over limit as well. That can be a killer for people. And I'll have to read your comment here, MC, because it didn't all quite show up. Let me see if I can actually, let me move it up so you can, it doesn't show up. Sorry about that. Almost there. I'll read it out for everybody. So there's an interesting approach to retirement drawdown. When the market is in a bear, live off credit rather than selling down. Keep discounted equities so it gives your equities time to recover. Yeah, that's one way to look at it. That would be where a financial person would really be able to be a benefit, I think, if you have a sizable portfolio, which a lot of retirees do, right? That they have to be on top of. So that's one way to look at it, and not have to hopefully sell when your things are down. That's the hard part. That's the one thing I'm nowhere near retirement unless I win the lottery, but I don't buy lottery tickets, so that's not going to happen. I still have I don't see myself necessarily retiring at 65 necessarily. It would be the dream. And MC, I don't know why your comment, there we go, it's gone. But it's something to really think about and be what to start to put your things into, what to start to put your investments into as you get older, right? To protect it. That's the big thing. It's hard. It's hard to judge it now, because on this year it's such an odd year, because obviously, as everybody knows, as you in the past, what people would do is go into more fixed income bonds, that kind of stuff, for when they get older, or 60-40 for portfolios. But that's, this year just got hammered. So it's kind of like, you have to really, there's a lot of planning to go with that. So I'm not at that point yet, but that's something that's really on my mind. Like, what's going to happen when I reach my goal of how much I want to have saved, but what's the transition from that? So major financial risk retirement is called sequence of returns risks. So that is one of the many, many ways to mitigate risk. I have to research on this. DB pensions or any type of fixed income product will mitigate risk as well, but obviously DB pension plans are pretty much dead. Sorry, what does DB stand for? I probably should know this. It probably is very obvious. But yeah, pensions are very, very rare. I was I was really fortunate enough to work for a company that had a pension, and I wasn't there for a huge amount of time, but it's really, looking back, I should have stuck it out, but no, I wouldn't have been able to. But it's nice to have, because you look at it, what now, I mean, it's a good thing because I can't, defined benefits. That's what I thought. Yeah, that's what I was, just totally lost my mind. Thanks. Justin knows it, define. But the one good thing about the law, like now that my pension I have and it's locked in, is I could never touch it. So when I left, when I left the company, you have all this, all of a sudden you have to take it all. You can't have, it's not in the company. It was in, I think it was with, I had to move it, or not move it, but it was no longer, I had to adjust it because it was, for whatever reason, it had to get turned into because it was no longer active. I had to go, it wasn't in a pension, so I had to put it into a lira. That's what it was. So I moved it around, that's kind of thing. But it's really growing. It's actually kind of nice. And it's actually kind of worked out that I haven't been able to touch it. So yeah, that's the hard part, right? That's why we see a lot of people working later and later and later, and that's the biggest worry, right? Is you retire, and you're like, if you don't own a home, you don't have that equity in a home, and you're like, the last thing you want to be is 70 years old and destitute on the street. I mean, because you don't know necessarily how long you're going to live for either, right? I mean, both my parents are in their 80s. So it's like, yeah, it's really hard to know. Yeah. Okay. That makes sense. I used to work for another company that had that. Sorry, that was it. That was what it was. And then when I left that company, because it was very, very, very low amount, it got paid out for whatever reason. Yeah, something like that. So long ago though. Yeah. Okay. Yeah. There was a lot of those, like city pensions, that kind of stuff. Yeah. Yeah. Government pension, that kind of thing. That would be. We should all get. I guess we should all get government jobs. Yeah, and that's what I would have then. Yeah. So I have to pick out. I get to have to pick. And I had to do that when I worked with the pension. Like when I worked at the employer, we got to choose what we wanted to do. And there were certain, it was done through, the employer did it through Sun Life. So there was different ones that you could pick, right? And every year you could do it whenever you wanted, basically adjust your things that would go into there, and then choose what you want. But yeah, it makes sense if you don't have any, a lot of people, it's funny, we had this pension at our where we worked, and it wasn't actually mandatory to sign up with. You could opt out. Why anybody would want to opt out, I have no idea. But people, you'd see some of the younger people in there. Is they'd be like, oh, I'm not going to be here working very long. I don't want to bother. Not going to bother. And it's like, what are you doing? It's free money. Like, what are you thinking? And another employer I worked at, they had the pension, but they also had RSP matching. So you could put a portion up. There was a maximum you could put in the RSP out of your paycheck, and they would match it. So obviously, all of a sudden, you put it into your RSP, and your money would double. And there was people that wouldn't sign up for it, and I was just like, I'd be like scratching my head, going like, it's either they're giving you free money. He's like, no, I need all my paycheck. It's like, yeah, but you can't get through to somebody, So biggest difference, deferred benefits is employer pension holds the risk, the DC plan you hold the risk. Yeah. There we go. Yeah, there's not a lot of places that have these, it's really true. Yeah. Yeah, it's fortunate enough if you work for a company that has a pension. That's awesome. Yeah. Yeah. yeah, they're not necessarily around as much anymore. That's for sure. Oh, this has been a good stream, everybody. Thanks for tuning into this one. It's always good. Always good. See where the conversation goes. But we're rolling into about 8:45, so it's almost time to kind of wrap it up. So if anybody has any last minute little things they want to add, by all means, shoot them up in the comments. It's always good to get a last few in there. If you haven't done it yet, I always like to say hit that like button. It's always helps out the channel as you hit the like as you come in or leave, would be appreciated. As far as, here we go. Biggest risk in was defined benefit pensions know how to manage the risk. You'd hope, right? Most people have no clue. What was it? Wasn't it the Ontario pension plan that wasn't invested into FTX? That's what you hope, right? You hope they do, but it's I don't know. The whole FTX thing was, yeah, they probably shouldn't have, but in some ways they're looking for returns, right? For the people, but unfortunate. Yeah. That's kind of the one of the things is like, sometimes you have to take your own, take things by the reins yourself. Is sometimes better, right? Ontario, that's what it was. The Ontario's teacher pension. Yeah. I forget how much it was. It was a small portion. It was a small portion. Like it was it was very, very small, but it was still a substantial amount of money that they lost. I think it was one. I don't want to say a billion. Hold on. Let's search this here. Ontario pension. It'll probably show up quickly. Let's pull that up. 95 million. Here I can. So there we go. 95 billion. Sorry, 95 million, not billion. 95 million. There we go. Yeah. I don't know if it shows what percentage. Ontario's feature. They had 95 million invested. This must have been it doesn't say if it's US or Canadian. I'm going to assume US because this is a US website. Yeah. Crazy. There we go. So that's over. Yeah. It was 100 and something million, wasn't it? I think after exchange at the time. Pretty crazy. Anyways. Yeah. So close MC. Yeah. Pretty scary. Anyways, there we go. Well, thanks everybody for tuning in and joining. All the regulars were here. Always appreciate the conversation. It's always kind of fun to come on, see where things go. We always start off with a little bit of a plan, and then we go and see where the conversation goes, which is always fun. And there we go. Is Aritzia? Okay. Yeah, Aritzia is a popular one too. I'm gonna add that one to the you know what, MC, I'm gonna add that to the. We actually didn't look at the. I'm gonna add it to the Google. I'm gonna add it to the watch list because there is a few people that have it, and it's a popular one. We'll see how we'll take a look. MC, we'll take a look tomorrow and how they see if there's any news from Aritzia, popular Canadian company. So there we go. Well, thanks everybody. That's about all I've got today. Thanks for tuning in. If you're just tuning in now and you're late to the show, the replay will be posted on the channel, and then we'll be back tomorrow, 8:00. It's already going to be Wednesday tomorrow, so hump day tomorrow. It's we'll see what happens. We'll check on that Aritzia news. So always good having everybody join in. The coffee crew is here, so I do appreciate it. We're going to sign off, and we'll catch you all tomorrow.